Hey there, have you been struggling with being profitable in trading the financial markets, be it Forex, crypto, stocks, whatever? Then this video is the remedy that you need. Pay attention to this video as I'll be showing you a powerful but simple strategy that can help you to become profitable and also remain profitable as a trader. Are you a newbie trader? Have you been trading for long, but you keep jumping from one strategy to the other? Let me burst your bubble. There is no holy grail in the financial markets. There is no perfect strategy in the financial market. Every strategy has its own lapses, but what matters is how you are able to utilize the win rate of that strategy. So in this video, I'll be teaching just a simple strategy that has to do with just two things that you need to look out for on your chart. Whenever you meet these two things, all you just need to do is to execute your trade, put your stop loss, put your TP, and let the market decide. I will always say, there is no perfect strategy in the market. There will always be losses. But what matters is let your win rate be higher than your losing rate. So with that in mind, I would like us to dive in and learn the simple strategy that I'm going to teach you. Get your pen, get your book, and make sure that you jot down a whole lot of things that I'm going to say on this video, and also ensure that you stay to the end of this video, and don't forget to subscribe and hit the like button so that this video will be visible to a whole lot of struggling traders out there. With that being said, let's dive in. We're looking at two classes of candlestick patterns, the bullish candlestick patterns and the bearish candlestick patterns. Hey, we are not learning the whole candlestick patterns. We are just taking two for each of them. Just two candlestick patterns. For the bearish class, we'll be looking at just two candlestick patterns. Hope you know, for the bullish class, we need the candlestick patterns that can tell us when to buy or go long in the market. While in the bearish class, we are looking at just two candlestick patterns that can tell us when to sell or go short in the market. So with that being said, follow through as we unveil these candlestick patterns. Okay, so under the bullish class, we have the hammer and the bullish engulfing. We have the hammer and the bullish engulfing. Then, under the bearish class, we have the shooting star. We have the shooting star and the bearish engulfing. So we have for the bullish class, we have the hammer and the bullish engulfing. For the bearish class, we have the shooting star and the bearish engulfing. So these are just what we need. Under the bullish class, whenever we see any of these two candlestick patterns, we'll start looking for what? Buy or longs. Then under the bearish class, whenever we see any of these two candlestick patterns, we start looking for shorts or sells. So we are going to look at the anatomy of these candlestick patterns. First, let's look at the hammer. Hammer candlestick pattern. So the hammer candlestick pattern looks like this, or you can equally see it like this. So the idea behind a hammer candlestick pattern is just this. The wick, this is referred to as the wick. This is referred to as the wick. That is, the tail of the candlestick is referred to as the wick, while here is referred to as the body. So what makes up a hammer candlestick pattern is that the wick must be longer than the body. Note, the wick must be longer than the body. If the body and the wick are of equal sizes, it's not a hammer. Note, the wick and the body, the wick must be longer than the body. If both are equal, then it's not a hammer candlestick pattern. So something like this is not a hammer candlestick pattern, because if you check, the body and the wick, they are of almost the same length. So we don't see that as a hammer candlestick pattern. Now, this is for the hammer. Let's look at the bullish engulfing. So whenever we see this in the market, we don't pay attention to it, we just leave it. So let's look at the bullish engulfing. So in the bullish engulfing, we have something like this. So the idea behind the bullish engulfing candlestick pattern is very simple. The second candlestick must envelop the first candlestick, or the second candlestick must cover the first candlestick. So just like this one here, if you check now, this one now swallowed up this particular candlestick. The same thing happened here. This swallowed up this particular candlestick. So this is what makes up a bullish engulfing pattern. This is what makes up a bullish engulfing pattern. And okay, sorry, I will need to pay attention to the labeling. I need to pay attention to the labeling of this one. Okay, so I had to use the coloring so that it will be clearer. In your Forex charts, the red candlestick usually represents the bearish candle. So while the green candlestick represents the bullish candle. So what makes this a bullish engulfing candlestick is when the bullish candle swallows up the bearish candle. So this one here, the bullish candle swallowed up the bearish candle. In this case too, the same thing happened. So this is what we refer to as a bullish engulfing candlestick pattern. It is that simple. Wherever we see this or this, we'll be looking out for buy in the market. And just like I said, it's not everywhere you see it that you take it. No, you need to wait for them to occur at a particular zones in the market before you start thinking of making any trade decision. If they are occurring at any place aside these zones that we are still going to learn later, please don't bother doing anything about it, else you may get trapped in the market. So let's look at the bearish class and see what the bearish class has for us. So this is what the shooting star looks like. The idea behind a shooting star candlestick pattern is that the wick, which is this long tail here, must be longer than the body. The wick must be longer than the body. So if you check now, it's the same thing as the hammer, but just that is the inverse of it. So whenever we see this occur in the market, we need to start looking out for sales or go short in the market. But remember, at some specified zones, it's not at every zone that we take trading decisions based on this. So that is that for the shooting star. So let's look at the bearish engulfing. So in the bearish engulfing, we have something like this, or something like this. So for the bearish engulfing, it's very easy to understand. It simply means when the bearish candle swallows the bullish candle, just like you can see here, just like I said initially, the green candle represents the bullish candle, while the red candle represents the bearish candle. So when the bearish candle covers the bullish candle, it is known as bearish engulfing. So whenever we see this, we think of selling or taking shorts or taking short positions in the market. So that is just the simple explanation of this. And this is just what we'll be needing for our strategy. Now, we'll launch our chart and see the practical applications and have a real life feeling of these candlestick patterns. We'll be looking at 4 candlestick patterns. We are not going to learn the whole candlestick patterns in the whole world. No, we are not here for that. We are just picking the necessary ones that suits the strategy. But bear in mind that it's not everywhere you see this candlestick play out that you are meant to enter the market. There are particular zones that you need to see these candlestick patterns confirmed before you make your entries. And again, let me say this. If you are to get the best out of this video, please put away everything you know before now about trading. Put away every strategy that you know before now about trading, except you are already profitable using that strategy. If you are not yet profitable using that strategy, please put it at the back of your mind so that you don't confuse yourself with what I'm teaching you. Because there's something about strategy that you need to understand. If I'm trading SMC and my colleague is trading price action, I may be seeing a sell, my colleague could be seeing a buy, but at the end of the day, we may come out of that trade with profit. Why? Is because what matters in trading is your entry and your exit. So the strategy I'm trading is not a holy grail. The strategy my colleague is trading is not a holy grail. What matters is our entry and our exit. So if you are not yet profitable, irrespective of the strategy you are using, I know you must have been told that SMC is the best, you are trading with the banks and all that. Or that's all bullshit. Chill as we learn this simple strategy. The goal is to remain profitable, not to be right. Okay? So put away every strategy that you know that is not working for you. Be humble enough to put them away and follow through the course of this video so that you don't get yourself confused. Because I will not be telling you, okay, this is what you will do. Meanwhile, your ICT strategy is telling you, no, you need to wait for liquidity trap and all those things. No, although you don't need all those big English. What we are here for is to make money. So follow through. Okay, we would like to have like a real life experience of these candlestick patterns. I have them marked out here. So this is Crash 1000 charts. For those of us that trade synthetics, you should be familiar with this, but it works in every chart. You can go and look at it from your favorite pairs and all that. So here, this point we have the hammer. You can see it here. We have the hammer, and after the formation, you see that this market rallied up. Had a pullback here, formed another hammer here, and rallied up to this point. So here, if we look at this point here, we have the bullish engulfing. So we have the bullish engulfing here, and as you can see, after that, we had a rally to the upside. So, okay, look at this point here. We have the look at to show us. Okay, look at this one here. Look at this one here. This is a shooting star, but as you can see, this after the formation of this shooting star here, let me mark it out. But as you can see, after the formation of this shooting star here, which means from what we learned in the previous sessions of this video, the market was meant to sell if we are being conventional about it. But take a look at it. After the formation of this shooting star, the market continued to go up. So that was why I said it's not everywhere that you see these formations that you enter a trade. You need to consider another factor that we are going to discuss on the next part of this video so that you don't get yourself trapped in. Okay, so that's why you need to pay much attention during the course of this tutorial. So if we look at this one here, this is a bullish engulfing, and as you can see, the market went up from here. So here now we have the shooting star. Here now we have the shooting star, and what happened after the formation of this shooting star? The market sold heavily. Here again we have the shooting star. What happened? The market sold down to this point. Here again we have the shooting star. What happened? As expected, the market sold heavily. Here again we have the shooting star. The market still sold. Here we have the bearish engulfing. Please note, we've looked at the bullish engulfing. We've seen the bullish engulfing. We've seen the shooting star. And the one left now is the bearish engulfing. So let's take a look at the bearish engulfing. This is the bearish engulfing. And what happened after that? The market sold down to this point. Look at the bearish engulfing again. What happened after that? The market is still sold heavily. Let's look at this one again. This is the bearish engulfing. What happened? You've seen there was a pullback, but later on it went down and sold heavily. This is another bearish engulfing. What happened? The market sold. Here we had a bullish engulfing and the market bought for some time before it started selling. So okay, this is another bearish engulfing, and as you can see, after that the market sold. This is a shooting star here. This is a shooting star here. This just happened recently. Okay, I think I took this trade. Yeah, this was around January. I took this particular trade. So if you can see this one here, this is a shooting star, and as you can see, the market sold heavily. So you see, this strategy is very simple, and we've covered the first part. On the next video, we are going to learn how we can use these candlestick patterns to make sound trading decisions. Remember, like I said initially, there is no perfect strategy to trading, but there are strategies that have high probability setups, and this is one of them. And this is one of those simple but powerful strategies that can make you profitable and launch you to the realm of profitability in trading. Please guys, stay true as we are going to learn about how we can implement these candlestick pattern formations and in our trading decisions on the next video. So if you've not subscribed to this channel, please do now, and also turn on the notification bell so that when we upload the next video, you'll be the first person to get notification. If you learned a lot from this video, please do well to share with us what you learned in the comment section, and if you have questions, please do well to drop them on the comment section and we will address them. Also, don't forget to share this video with your friends and families, and also give it a thumbs up so that this video will be made visible to other struggling traders out there. I wish to see you on the next video. Please get your pen and your book ready, as on the next video we are going to dissect how we are going to use this, how we can use this candlestick pattern formations to make a whole lot of money from the financial markets. Remember, we are not here to feed you with all the jargons, all the concepts and vocabularies that is filled with a whole lot that comes along with some strategies. We are here for the real deal, to make the money. So don't forget to subscribe and also give this video a thumbs up. See you on the next video. Cheers.